Good morning. This is Chris Robinson, Robinson Ag Marketing for today's pre-opening grain and livestock comments for Friday, 9/19/25, September 19th, 25. Well, the phone call is in progress right now. They started talking about 20 minutes ago. Markets are closed. We'll see if it makes any difference. The feeling is that even if they did come to a deal, it's going to come for 2026 beans, not spot month beans. That's because all these news reports are saying that they're full up with all the beans they need right now. So we'll see. I've seen headlines be wrong before. Overnight, we did get confirmation that China bought a bunch of canola from Australia. Why is that important? Well, they continue to be sort of at odds with Canada. So I know some of you guys here listening to me here in Canada. Again, you're kind of caught up in this whole trade war nonsense as well. As China is picking and choosing where it gets its stuff from right now. It's not a big fan of either U.S. or Canada. We'll see what happens today, though. Okay, hope for the best. Overnight, these corn had a 3 cent range, finished up 1 3/4 cent at 4.25 1/2. The rubber beans up 3 cents at 10.40 1/2 with a 2 cent range. No, excuse me, 6 cent range, very small range. These wheat, both Chicago and KC, unchanged to slightly lower. Again, nothing's really changed in that narrative. I hate to beat a dead horse. We need more follow through buying. Over to the livestock. October cattle finished up $1.50 yesterday, 234 and change. October feeders finished up 260 at 351.70. Even the hogs finished up slightly higher. I'm looking more towards maybe some more hedging here in front of today because we're going to get our cattle on feed. I'm still watching to see if these corn is able to stay above 230. We're kind of in a holding pattern. We've had the correction. We clawed back about half of the correction. I'm talking about December fat cattle. Remember, we broke from a high of 243 and change, 240. Excuse me, what was the high there? Yeah, 243.57 and a half from 43 down to 30. So we broke $13. We clawed back almost half of it after last Friday. Remember last Friday we had a terrible settlement, and then we came in Monday, and we had a correction higher. He did the same thing in feeder cattle. They're making it very, very hard to day trade cattle, folks. I'm not telling you anything you don't know. This is a market where you need to be using options, especially if you need a hedge, because what you don't want to do is have a hedge on, get stopped out of your hedge on volatility, and then next thing you know, the market's back underneath where you needed your hedge. That's why a put is your best solution if you're a long producer and you just want to make sure that, hey, come hell or high water, I've got this level of revenue protected. If you are going to be day trading or trading weekly on a weekly basis with these cattle, I'm not telling you anything you don't know. You better have deep pockets and you better be right more often than wrong. It's some of the hardest trade I've ever seen, and I've been doing this since the late 80s, early 90s. Cattle is very, very hard to trade right now. That's why, again, if you're a producer, most of you listen to me are producers. Um, you really you shouldn't be day trading cattle anyhow. You already own the cattle. You're long in the field. Make sure that you're defending the revenue. We've had tremendous revenue gains. That's what we're here to do. Protect those revenue gains. Best way I think is with the put, a straight out a flat put, or a vertical bear put spread where you don't put yourself in risk of margin. I have some guys that use LRP in conjunction with these other puts. The only issue with LRP is once you own them, you can't sell them. You can't, if they double or triple, you have to wait till the expired to actually get paid. That's the rub there. But at the end of the day, the LRP, it is a strategy, and a lot of my clients use the LRP. Plus, they'll set hedges with me. So we'll see what happens today with the big China talks. Lord knows soybean farmers need something good to go on. I will say this: take a look at November 2026 beans. There is where the action is. We are basically at a 1 year high up there at 1081. Last week we got as high as 1090. Why is that important? Well, 1090 was the highest price since October of 2024. So I'm calling that a 1 year high. On its lows, that contract was down at 983. So you're $1.10 off the contract lows. You're at 1 year highs. I know it's early to start thinking about doing something for 2026 when you've got your hands full with 2025. But that's a wake up call. And again, that's something that if you don't have a broker that points stuff like that out to you, um, People always say, what's the value? Why should I work with a broker? Why would I have an advisor? Things like that. There's so much information to keep track of out there. If you're working your farm and raising your family and trying to do everything else, it doesn't leave a whole lot of time to focus on this, which is a very, very important part of farming. I mean, you put uh, thousands, if not millions of dollars into producing a crop. And basically, most people's marketing plan is, well, we'll hope and see, what we can get when it's in the bin. I mean, that's why you need to be, I think, more active. And if you can't do it personally, you should have someone that can at least tap you on the shoulder and say, hey, look at this 1 year high. What are you going to do? This is Chris Robinson. Have a great day. If you need help, give me a call 312 638 8868. I look forward to talking to you. If I don't talk to you, have a great weekend.